Well, let's get back to the trade war and its effect on various aspects of the market. Whether or not those new tariffs actually go into effect on September 1st, seems like they probably will. The trade war between the U.S. and China has already sent waves through the economy and through various industries. Our next guest says it is affecting M&A, private equity, IPOs as well. Arel Rende is Clearsight Advisors investment banking analyst, and he is here with us now in the studio. So, Arel, as you look at the trade war, one would, we keep hearing sort of anecdotally, it's having effects on business decisions, spending, et cetera. Where are you seeing some concrete examples of that?
So some concrete examples is really in the macro market in the first half of 2019. We saw overall M&A activity in terms of the number of deals dip by almost 30% compared to quarters 1 and 2 last year. And overall deal volume on a dollar amount fell by about 15% as well. And that's really being driven by the Asia Pacific market, which just saw a cratering in overall deal value. It's under $500 billion for the first time in almost a decade.
Is that cross-border? Are we talking about even domestically within those markets it's going down? What kind of trends are you seeing there?
So it's predominantly cross-border, but the thing now is everything's cross-border. It's really hard to find a company without exposure internationally, whether it's having offices in different countries, clients in different countries. There really isn't a thing as a inter or intra-nation deal anymore.
No, I could totally appreciate this. And so obviously the trade war and the uncertainty there and business demand kind of slipping. Since it's kind of concentrated in the Asia Pacific area, is some of this also picking up the Japan-Korea conflict that's really starting to boil over right now?
Definitely. We're seeing less of that than with China just because of the explicit targeting of China, but that's there as well. But even though we think that happens, we see these huge marquee deals happen. I would point to Takeda Shire happening with the Japanese pharmaceutical manufacturer buying the British pharmaceutical manufacturer. Okay. So not to the same extent as China, but definitely compared to last year, we see that.
Okay. So what do you think are going to be the ripple effects of the IPO and mergers, impacts of the trade war more broadly on the U.S. economy, on the global economy? And do you see an end in sight? I've been on this show before arguing that there's no reason why China should do anything except for wait this out with the election looming in 2020. Is there any chance of winning a trade war like this on the U.S. side?
In terms of winning, I think, as you said, it just keeps going on and on and on. And as Julie mentioned earlier, we don't really know if these are going to go into effect in the first place. But it's really that central uncertainty that I think is driving the impact on the broader economy. We don't know what's going to happen. The decision makers seem unpredictable. And because of that, people who want to make those buy, not buy, invest, not invest decisions are saying that they're going to wait too. And not utilizing that capital impacts not only public markets, but private markets as well.
So 2 questions then. These deals that are not happening, are they simply being delayed and you think that they will happen eventually? And 2, if they're not spending that capital on a deal, what are they doing with that money? Are they just holding on to it? Because it's not, nowhere they can put it right now is going to get much yield, for example. So where is that money going?
Yeah, so first off, I think you're right. They are going to wait on it. But as anyone who works in the deal environment knows, time is risk. And the more time you wait, the more things that can go wrong in that period. So it could have the end effect of just not doing anything with it at all. And particularly with the private equity firms, we're seeing now just so much capital being hoarded, over $2 trillion globally of dry powder just effectively sitting in bank accounts waiting to be invested. So we've already seen that trend start to happen.
That's super telling because the policy response globally is, hey, we're going to make money easier. And you're just describing a situation where that's actually not the need.
Exactly.
Right, that's not the problem. That's not enough necessarily to spur this money to get out there. Talk to us specifically about the United States, because you say a lot of this slowing has been happening in Asia Pacific. But, sort of, again, anecdotally, we've certainly been seeing, yes, we've had some high-profile IPOs delayed here in the U.S., but we've seen a pretty hot IPO market already this year, and we've seen a pretty hot deal market already this year just in the U.S.
Yeah, definitely. And the U.S. is a little bit insulated by that. And I think the driver behind that is predominantly currency-related. The dollar remains the gold standard, the world reserve currency. But I also think that invoking some more, I'll call them non-economic forces in monetary decisions, whether or not the United States receives that foreign investment because a country doesn't want to work with the United States, either retaliating against the trade war or because of other political reasons, could soften demand for the dollar holistically and thus our entire economy. The U.S. remains the largest target for that foreign direct investment. And if the dollar becomes less attractive for either trade war reasons or economic reasons, American assets become less attractive.
All right. Arel, thank you for coming in. Arel Rende, appreciate it.